Good morning, ladies and gentlemen. This is Greg Sabala from National Brokerage Group. Thanks a lot for joining us today on our webcast. I'm joined here today with Mike Toy, and we're looking forward to kind of discussing three simple steps to doubling your commissions. And the one thing that I wanted to kind of lead down the path is we looked at past accounts that had done production with us in 2017, 2018, and then so far in 2019. And we've seen some quantum leaps a little bit into 2018, but 2019 especially, we've had a multitude of accounts that have really jumped up in their production with us. So we're fortunate enough to already have all their life insurance business coming to us and through us. So we had an expectation of business, place percentage, things of that nature. But we saw drastic increases, and we were just kind of curious why. We always love that type of information. We wanted to kind of reflect back of what has made these firms successful, and that's what we're kind of predicated this webcast on, is because everyone had a similar type of situation or similar type of change in the way they market that's led to record sales. And so it's a copycat industry, so let's copy success. One of the first things I want to discuss and just jump right into it is adding settlements as part of your repertoire in your marketing. So whether you're doing property casualty, life insurance, financial planning, what have you, a settlement definitely has its place. It's not for everybody, it's not for every particular client, but it is a nice opportunity for you to give cash to a client that otherwise has a policy that is not worth very much. I wanted to give you a personal example that we actually just are not in the process, but we're in the process of closing it right now. We haven't placed it quite as of yet, but this is a existing case that we got an existing offer on a client. So long story short, we had a person that had $1 million policy that had no need for it any longer. They don't want it. They were just going to let it lapse. And quite frankly, they didn't have a lot of cash built up into it, so it would have just been a neutral thing for the client. I think the client might have made 10, 15 grand of the cash surrender value. With that said, we were able to shop the product out and look for a different option on the settlement market. We then got a financial offer to the client of over $340,000 on their policy. And the unique thing about this particular funder, and all funders are a little bit different, this particular funder actually contributes or puts more towards the commissionable available dollars as well. So it was $113,000 of commission. Now again, that commission goes to not only the writing agent, but to National Brokerage and obviously our third party that we utilize for settlements as well. But still, as you can imagine, that's a very big payday, not only for the agent and advisor, but also for the client. I like to start off with a success story because that's always a nice way to kind of get people interested. But that's another one that hasn't even placed yet. But because of that, now the agent's going to be making $50,000 of a commission or over that, and that's obviously going to increase their commissions. They're going to be part of our success story probably later on this year because now we're seeing their production of premium increase, plus the settlement market now increase. And this has actually unveiled one other opportunity. The clients now referred us to a friend of theirs that the client was in a similar situation. They're looking to lapse the policy. So let's just kind of jump into real quickly what makes a good option for a settlement. Obviously, they're older clients. So basically, you're looking for, at the lowest age, probably 65, but typically 70 and above or upper 60s and above. There's a couple different things that a client might have. They no longer need the coverage. They're just looking to move the coverage. Maybe they have, like I mentioned in this one, this was a unique situation where the client no longer wanted the coverage. But let's say, for example, they wanted to get into a better life insurance policy. Well, in this situation, we could have taken $340,000 to help fund a new life insurance policy. Again, the angle that you got to take into consideration for settlements, though, what makes a good settlement is the client has health risk. What makes a bad life insurance client is the client has health risk. So that's a unique variable to kind of bounce around. Where we have a great deal of success and where a couple of our agencies have really cleaned up is clients that don't want a term policy. So let's say, for example, they had key man coverage of $1 million and they are in their 9th year. They're going to turn 70 next year. Their conversion privileges are expiring after they turn 70 as well. But they have no intention to keeping the policy because they sold their company. They no longer need a key man buy-sell policy. Well, this is an opportunity to take a look at, is this settlement an option? One, you get commission on settlement. Two, the client gets paid on the settlement. Three, you also have the opportunity to convert this case and get a full commission on the life case. So now you've got a 69-year-old in this particular scenario on $1 million policy or whatever it is, and you get full commissionable dollar on that, plus you get the settlement. The client loves it because they're getting something for nothing. They were going to let something at no value go, and now for a little bit of writing a conversion application, now they're going to put money in their pocket. It's one of the few times in our industry where a client is going to be really thanking the heck out of you because you created something out of nothing. And as good as life insurance is, and we all know it's very important, again, the person that's typically signing on the application for life insurance to pay out, they've passed away. In this situation, now they are getting something tangible. They're getting an asset for having a life insurance policy, and it's just something that a lot of them just don't even know is an option to them. So it's a really fun opportunity to talk to a client. I really enjoy when agents are talking to them and unveiling what the opportunity is and what they could get for the policy, because clients oftentimes have no value in their mind to that policy, but you are bringing something out of nothing. It helps create more connectivity with your client, of course, but also a great opportunity to get referrals. If you've got a client in that age group, it's very common for them to tell their friends of, hey, I did this, you should look at this as well. It's a great way to make one sale become other sales. Obviously, it drives higher compensation. You're doing conversions on older age clients, and that's obviously going to drive nice compensation for you. And that's a couple of the groups that we saw as well. We have some groups that wrote a great deal of term policies, and a little bit on the GUL side, but mostly term policies. By doing a few settlements, now we've done conversions of large policies that were term. That's been something that's really bolstered their commission because they had a lot of business in the door with us, and we greatly appreciated it. But the average premium was around $2,000. On the conversion cases, the conversion premium was around $20,000. So now they've added another zero to their commission line, and it's helped them out immensely. So you can kind of see where one case can jump into a larger sale, but I wanted to open that as an opportunity. It's one of the first steps to increasing your commission. Again, we are very transparent on everything. We show all commissions. We show everything that's on the gross offer. But also one thing that's a key thing is we also are keeping you compliant. The settlement market is compliance oriented in all 50 states. And everything that we do is very much about compliance. We are not going to proceed with a deal if it's not better for the client. Because a lot of times in the situations, you can get a settlement that is okay-ish, but it's really good for the agent. We won't proceed with that. We are only going to look at the best interest of the client. And yes, we all can make some great compensation on the settlement as well. But again, we want to sleep at night. We like to feel good about what we do on that side of it. So that's one thing about the way we market settlements. Have been very well received with the funders, and they know when they receive an application from us, it's with the right intent and that helps us out within the process. With that, I want to hand it over to, actually, I'm still on for a bit more. I apologize. On the step number 2 to increasing your commissions. And it's policy review and jumping into what you currently have in your file cabinet. That's exactly what the groups are doing right now that have increased their commissions. These are not necessarily new clients. They're clients that they had in their file cabinets that they did a proactive email push from us, and they got out in front of some of their clients just stating, we'll do a free policy review to make sure that you're still in good standing with the policy and that the policy is still meeting your needs. It's a benefit for you and the client, and obviously it's a good opportunity to consider exchanging or getting rid of some of the old policies you had. What used to be the best product in the industry may not be the best product in the industry anymore. So, for example, for those of us that have been around the industry long enough, GULs were just revolutionary when a guaranteed universal life came out. It was great. Everyone wrote them. There's a ton of them on the books. Well, the problem with it is it doesn't really have much sizzle to it. It has no cash accumulation, has no living benefits. It's just purely a death benefit policy. It's like a glorified term policy. If the client is still insurable, we can get them a great policy with cash accumulation, with living benefits, and floor the GUL typically if the client's insurable risk is somewhat similar. And now you're checking a few more boxes for the client that's going to make them more favorable for their future, for what their specific needs are for insurance going forward. So it's been a really good opportunity to just go back, offer your client a free policy review, and it gives you in the door with your client, so that you are now reviewing policies, looking at different opportunities, and clients are calling you rather than you having to muster up every single sale.
Good points. Hey everybody, Mike Toy here. Hope you can hear me. Raise your hand if you have trouble hearing me. What I wanted to talk about is, why do we do policy reviews, and really what are they? So just to touch on what they are, for example, basically all we're doing is we're looking at a current policy that a client has, and we're just comparing that to what's out there. We're going to see if it's still the best premium, is it still the right product for them, do they need something different now for whatever reason, have they gotten married or divorced, who's their beneficiaries. You know, that's one approach. I have an agent that uses that as his approach. He'll ask, is your ex-wife your beneficiary? And that opens a lot of doors for him. So that's really what they are. Now, why do we do them? We do them for a lot of reasons. Number one, that's our job. It's our job to look at these policies and make sure it is still in the client's best interest. It's our fiduciary responsibility. Other reasons why we do them as agents is because it benefits us. It earns new commissions. It keeps us compliant with the DOL. On top of that, it opens up a lot of other doors for marketing and cross-selling. So like Greg was talking about earlier with settlements, when you do a policy review, it can go a lot of ways. So I'm going to give you a quick example. I've got an agent right now who, we did some policy reviews. We looked at somebody's policy. It didn't look on the surface like it was a big opportunity. It was a small face amount. It was about $100,000. She was in great health. She had options, so it's not as if anything was urgent. But he did it anyways as part of his normal practice. It was coming up at the end of the term. He called her. Turns out her husband was actually in very poor health and had a bigger policy, which we ended up converting. We had no way to know that other than he just called on this seemingly small policy without an opportunity. So those are some of the reasons why we do them, because not only can it produce a sale, it can produce other opportunities that we're not seeing on the surface. And on top of that, if you do a good job and people appreciate the call and the review, then they can refer you to people that they know. So it just opens up a lot of doors just by doing just a simple policy review. One other thing I'll add on that before we go to the next slide is that it's so much easier to do a policy review than it is to prospect for new clients and prospect for new sales. I mean, if you're calling an agent, a client, and let's pretend you haven't talked to them in 10 years. It's still an easier call to say, hi, Mr. and Mrs. Client. I know we haven't spoken in a long time. I just see that you have a policy. It's coming up to expire soon. I wanted to go over the options with you. You're not introducing a new concept to them. It may be out of the blue a little bit, but at the end of the day, they're going to appreciate it, and you're not coming at them with something new. Compare that with, hello, Mr. and Mrs. So-and-so. Have you ever thought about life insurance? You really need life insurance. Let's look at some life insurance options. That is so much harder and more abrupt than calling and reviewing what they already have. So it's while, yes, it produces sales, it doesn't feel like it's a sale. So it happens easier and smoother.
Well, the one thing to add on to that, Mike, that's a very good point, is some of our agents, what they've been doing on some of the communication they'll send out, they'll include the policy number. Or they'll bring up the policy number. It brings validity to what Mike had just mentioned, is gosh, I don't remember, one, maybe they don't even remember having the policy. Two, they just don't remember you as the writing agent. But it's going to bring validity to the conversation of, hey, I've got your policy number, here it is right now. Because, again, think of how much solicitation you have via email and phone calls. When you have something that truly identifies that you are their person, then they're going to give you the time to actually have the conversation, which, again, that's that foot in the door process that is so difficult to do.
Yeah, absolutely. Continuing on that note some of the things that we look for and some of the reasons why we do it. And these are things that you can communicate to your client as well. We just want to look at income now compared to how long ago it was that you originally wrote the policy, 5 years, 10 years, whatever it may be. Maybe their income has gone up dramatically. Maybe they need more coverage. And the right thing to do is just add an additional policy on to the one that they already have. So income, family, married, divorced, we kind of touched on that a little bit. Maybe they have children now, and the best thing to do is that. See if you can get them added on or a new policy with the children added on. Beneficiaries are always good to check on. Most people think they know who their beneficiaries are. Oftentimes they don't actually know, or maybe if they really sit down and think about it, it's not who they want it to be. So it's worthwhile for them to do too. And it is a process. I want to emphasize that too. Oftentimes it's not the type of sale that you call and it just happens right away. It's a process. You might have to reach out a couple of times and let it sink in a little bit. So on that note, I'm going to go ahead and turn it back over to Greg.
Very good. So we're kind of approaching step 3 already, but I wanted to kind of just reiterate a few things. Well, we're going to fly through the next few slides, but basically, previously table rated cases. This is something that a lot of people feel, gosh, I was table rated, I'm in the best position I can be. I barely snuck through underwriting on that other time. Well, a couple things to keep in mind is if a client is controlled and compliant with their physician. So for example, I had a heart attack, I had a stents put in, it was 3 years afterwards and I got this table rated policy. I was happy to get that policy. Well, keep in mind, if it's 5 years after, 6 years after, 10 years after now, and the client's had a good health, good experience, good medical backup, and good follow-up with their physician, we have certain carriers that are more favorable in that situation. So we're extended from the stent or from when they had the procedure done. Now we're 10 years down the road, and because there's more medical history and it's good, it's favorable. Yes, he had a heart attack. Yes, they put stents in, but it's a 10-year history. Now we can go back and reapproach with some other carriers and get a client that was table rated away from table ratings. We all do this on a preliminary basis, so there is no MIB code of a decline or something of that nature if it isn't favorable. So keep that in mind. Engage your rep. Don't shy away from a table rated case. I would say just the opposite. I would say the table rated case is probably more favorable than less favorable. So just wanted to let you know on that type of situation. Plus competitive plans. Some of the internal pricing is a lot more competitive. So that is actually a great situation as well. Extended maturity dates, policies that didn't have guarantees back in the day do now have guarantees, whether you're doing cash accumulation or not. So that's a great situation in that regard.
I'm going to jump in real quick. Can everybody see the screen okay? Can somebody maybe just chat box and see in the box there and say whether or not you can see? We've
had one person saying that they're not showing the slides advanced, but the slide we're looking at is advanced. So I just want to make sure that you guys are seeing the same thing we are. Well, there we go. Hopefully that helps it.
Fixed it.
So apologize about that. So I'm sorry, where was I? So on the extended maturity dates, that's a common one where people do not have a policy with extended maturity date, and then laddering benefits, basically getting term with permanent to accommodate a need. Where you're going to see that in an example of a policy review, you had a person that wrote a term policy when they were a little bit younger. That's when they were in their earning years. They're trying to, they're just trying to, get up there in making a bigger income. They needed to pay a lower premium, higher death benefit. Well, with all that said, you now have the ability to ladder those policies, have that term coverage, but have a permanent coverage that's going to provide you cash accumulation, living benefits, and more favorable benefits within the policy itself, which is kind of what we're hitting upon on the next slide. Is this isn't the old term. Old term insurance or old life insurance that you wrote isn't what we're writing nowadays. We have a lot more robust product offering, and it checks a lot more boxes in a client's mind. I now have some living benefits covered. I know I've got return of premium. Heck, I've got cash accumulation above the return of premium. Basically I'm getting different options taken care of. The life settlements we've already discussed, but long-term care annuities, we have all those different things that might pop up as well. There's a void in some of their coverage. So doing a life insurance review can lead to other opportunities such as an annuity or a long-term care sale. Again, having the conversation with the client can go many different directions. So you never go in with a preconceived notion, but again, we're just trying to drive the opportunity to you so that you can have a conversation with the client. Clients that already know you, they already had an experience with you because you wrote a policy with them, but now that's another opportunity for you to have a commission on that policy, but also engage the client and get them in a much better financial position.
All right.
Step three.
Step three, getting started. And so as far as getting started, you may have a system that kind of works for you already. Oftentimes people don't, especially if introducing policy reviews is kind of a newer thing for you or your agency. So I'm going to go through some of the ways that we do it, some of the ways that we can help you do it, because it's something we do a lot. You can almost, I say almost, but you can almost make a living on policy reviews alone. You can't completely because you have to make the sale initially, but you can double what you're making now just by doing regular policy reviews. Here's some of the reasons and ways how. Number one, we want to look through your existing policies that you wrote and filter those for opportunities. Some of the ways that we do that, for example, easiest way to do it is to go back, and this is 2019, look at policies you wrote in 2009, see how many 10-year terms there are. That's an easy way to start. So those are 10-year terms that are about to expire. So then you go back, depending on how long you've been in business, you can go back to 2004 and look for 15-year terms, that kind of thing. And from there, you can start to fine-tune it. In the OES system, which you should have access to, if you don't have access to your OES system, call us up and talk to your rep. We'll get you access to it. You can filter it a number of different ways in there. You can run reports on sales from a particular carrier, from a particular date range. There's just a million ways to do it. So those are some of the ways that we can help you get started doing policy reviews. If you don't have existing policies to look for and look at, and you want to do policy reviews, that's okay too. Then we just have to come up with an approach for you or your clients that you're prospecting with. We've got tons of marketing material that can be branded to you and your agency. You can send it out proactively. You can give it away as a brochure, however you want to do it. There's a misconception out there with both agents and clients that if I didn't write the policy originally, I can't really do a policy review. And that couldn't be further from the truth. So that's something that it may seem obvious. You might want to point that out and mention it to your prospects and your clients that even if you didn't write it, you can still look at it at no charge for them.
And, and with that said, to Mike's point as well, we've had agents say, well, I don't know if the 10-year policy I wrote is still active. I know I wrote it, I know it's placed, but I'm embarrassed. I don't know if it's even a still active policy. Well, that doesn't matter. If you're calling the client, hey, you had written this policy, it was coming up on its 9th year or 10th year, it still starts a conversation. If that client moves to a different agent or just let the policy lapse, well, what's the conversation? Let me do a policy review of any policy you do currently have. I do a free policy review. You want them state free. Of course, we know it's free, but for clients that provide the value to them, they're like, oh, this is something that normally costs money. Now it's not going to cost me money to do this policy review. Plus, on the policy itself, it's immaterial whether it's active or not, quite honestly, to start the conversation. And if they've already moved to another agent, great. Now you can get the business back and you're getting it back into your court. So don't shy away from the conversation. And to Mike's point, doing a policy review on policies that weren't written by you is a great way to kick off the relationship with the client, because you can evaluate what they did. And oftentimes, not all agents have all the same skill sets. And you'll have people that did the best guess they could, but they're with the wrong carrier, they're with the wrong product, the product's woefully not covering what the client's real needs are. So it's a real easy conversation not to rip down what they currently have on the books, but you can show the different options in a nice way and basically just state, well, this is good, but I've got a better way to get to your goals, and here's the product, here's the quote.
And on that note, thanks, Greg. On that note, that's something that we can help you with. And some of the real practical ways that we can help you with it is underwriting niches and product niches. So no matter what it is that they have, I'm not going to say all the time, but a good portion of the time, we can find some new way to offer the same thing, but with a little extra. Maybe something like, well, here's the new kind of life insurance has living benefit riders, the type that you don't have to die to use. Your old policy doesn't have that. Oh, well, gosh, it is. So those are some of the ways we can do it. We know the carriers that look more favorably on marijuana smokers or tobacco chewers or diabetes, whatever the case may be. Oftentimes, a lot of policies that we look at from years ago, it's almost like it was a one-trick pony. They didn't know any of those options, and they just went with whatever product was put in front of them or whatever product that the agent was most comfortable with. So use our knowledge and our expertise in that area to help you. That's what we want to do, is we want to offer that expertise to you so that you can have a better angle with these guys.
I think you just hit about like the marijuana usage is getting more prevalent in our country nowadays as well. So just, what was a bad thing and really difficult thing to underwrite before isn't as difficult. Certain carriers are more applicable than others. But again, all you need to do is unveil the opportunity, give us a call. We'll then kind of let you know which carrier is probably the best suited for what the client's needs are. We can definitely just stay in conjunction with you and try to make the whole process not only simple for the client, but for you as well. So basically, we've talked about settlements as part of your work practice, and also we're going to talk, and we talked about the policy reviews as just putting it as part of your DNA. How best to do it? We can kind of, fly through that as well. We're talking about the OES as a tool to work with. But basically, we want to change the way the policy reviews are done. I'm going to fly through this slide as well, but just we want to make the process less cumbersome for you, less cumbersome for the client. So the quicker we can get a quick fact finder that we have available for you, we can then go to work for you to find out, is this a product that doesn't match, or is this an underwriting that doesn't match, or maybe it's a combination. Unveiling settlements is just something that most clients aren't even thinking about. So you're going to be unique in that regard to have that conversation, because a lot of agents don't even discuss settlements because it's just not in the forefront of their mind. So we don't have a lengthy process anymore. It's easy to understand instructions. The client's going to be engaged because we're going to be utilizing the MBGO process after we go from there. So you take the client through a process, a quick and easy, painless process through a policy review. That's going to be positive. The client, let's say, for example, it's a success and they want to proceed with the application. Well, the next step, you can submit it right through MBGO. So if you have an illustration, you can hit the Submit app and attach the illustration to it and submit it right through MBGO. The client is going to have a painless process, and it's going to be very quick and easy for you. So as you can see on this particular side, you've got 3 steps that you are doing. After you submit it, we are in the driver's seat from that point. We're going to contact the client. We're going to take the app, order everything that's required if it's a medical examination needed, get the approval out there to you, so that you can deliver the policy and make a commission. We're trying to make the initial steps easier for you so you're more prone to do it. And obviously, you get full commissions. We don't participate on these cases. We're not doing anything different in that regard. Even though we might have done a lot of heavy lifting on the policy review, and NBGO is a quite big process as well. We know the more we invest in you, the more successful you will be. In turn, National Brokerage will be. So just keep that in mind. Don't tap the brakes on doing a policy review. We've had agents in the past say it's too cumbersome, too much of my time. It's not. It's a great opportunity. We've made it the pain points on the front end reduced. On the back end, most everybody on this call already is familiar with MBGO. They know it's kind of a painless process, and it's on the terms of a client. So if you have a client that's, hey, I want to have this, I want to be able to sign this on my phone and my iPad, everything that we do is compatible for that. So the clients are more prone to fulfill what they need to do and sign the applications and get us closer to the finish line.
All right. So in conclusion, just want to say thanks for joining the webcast today. This recording will be on our YouTube page within the next 24 hours. If you haven't subscribed to our YouTube page yet, I would encourage you to do so. There's a lot of great videos on there. For the most part, they are 2 to 5 minute videos on topics such as marijuana underwriting or policy reviews or field underwriting. There's just all kinds of different topics. Just quick little blurbs about each one just to help kind of give you a foundational understanding understanding of each one. So just want to say thanks again for joining the webcast, and give us a call to get started on doing some policy reviews.
Thank you very much.